What's up everyone, it's Scotty with Money Vesting. So markets here pulling back a little bit, slightly going sideways. It was a very strong week for the markets nonetheless. And in this video, I wanted to break down exactly what happened today, what Jerome Powell talked about very briefly, and of course talk a little bit about the game of musical chairs, because if you haven't played it, it is really important for you to understand what's going on. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. I actually ended up selling 2 covered calls on Tesla yesterday, well actually today, because of the price action that we're seeing. I keep saying yesterday because the time zone difference is so wild, because now I'm 12 hours ahead of New York. I've actually never been so far east in my life. The last time I was here back in Malaysia was about when I was like, I think 6 or 7 years old. But since I've only traveled west, I've only been in Europe and of course in the US, but I've never really traveled so far east. So I'm like 12 hours ahead now of New York. So it's kind of crazy that it's already morning time. It's actually 5 or 6 in the morning here, whereas in the US it's still 5 p.m. So hope you guys enjoyed this. Again, make sure that you drop a like, and link's going to be down below. And this right here is going to be where we start the game of musical chairs. And what happens if you haven't played this game is there's a set number of chairs. Let's say there's 10 chairs or 8 chairs. That's how we start. And there's more people playing the game, right? There's going to be either 12 or 14 or 15 people. There's going to be more people than chairs in this game. And what happens is that everyone goes in circles, right? So everyone walks in circle as the music is playing, right? There's music playing, everybody walks in circles, and then as soon as the music stops, you gotta find a chair. You gotta sit down and find a chair. The reason why I wanted to bring this up is because that's what kind of feels like about the market, right? I mean, the music's playing, everybody's having fun, the market's pushing higher, there's a lot of momentum, there's a lot of sentiment, everybody's like optimistic about it, but you gotta make sure that you find a chair when the music stops, not if, because we know, and you know, again, there might be some pushback in the comments, and that's okay, but doing this, understanding this, and you know, talking about the markets for such a long time, it's important to understand that these are not sustainable types of events, right? These are not like markets going to keep going up in a straight line, right? That doesn't happen in the markets. We often go like this, right? There's volatility, there's up and down momentum, there's going to be pullbacks, there's going to be sell-offs, there's going to be red days. I think that's just part of the business, that's just part of investing. So I think that's a good analogy, and you know, like I said, we gotta make sure that when the music stops, we have a chair to sit on. This right here is the market. So Dow Jones pulling back a little bit, not a whole lot, so it was just a, you know, very flat day. S&P 500 flat, NASDAQ flat. This right here again, advancing versus declining. Over 2,000 stocks were coming down, a little over 0 to 2%, and this really just serves as a reminder, but nothing else. And I actually posted a video earlier today going over Ray Dalio's analysis of the U.S. debt ceiling, and of course what should be done, you know, on a short-term basis and on a long-term basis. So definitely encourage you to check that out if you have the time. But of another 852 or 860 stocks here, down between 2 to 5%. So we did obviously have more declining stocks than we had for advancing stocks, and 1,100 stocks didn't really do anything and were flat on the day. So Chairman Powell, good news, says rates may not have to rise as much as expected to curb inflation. So that's probably one of the first times we're hearing from Jay Powell that he's going to be encouraging or, you know, is going to be in the favor of a potential pause in the future. So that's good news, as Jerome Powell mentions and talks about, you know, speaking at the Monetary Policy Conference, which I mentioned was going to happen today at 11 a.m. Eastern. He basically mentioned the financial stability tools helped to calm conditions in the banking sector. Developments there, on the other hand, are contributing to a tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. And of course, the extent of that is highly uncertain. So still highly uncertain, still no idea. Nobody has any idea on what's going to be the uncertainty or really the tightening conditions from the banking crisis, and what that's going to look like and what that's going to do to unemployment, inflation, all those other parts of the economy. But if it actually does bring inflation down, then the Fed's job is complete and they don't have to raise interest rates anymore. If there is still a pretty sticky inflation picture 6 months from now or 12 months from now, then of course the Federal Reserve, in my opinion at least, is not going to stop here. They're going to keep raising until they actually create a recession, which is obviously going to bring inflation down eventually. So on balance, Powell said inflation is still too high. Many people are currently experiencing high inflation for the first time in their lives. It's not a headline to say that they really don't like it. And we think the failure to get inflation down would not only prolong the pain, but also increase ultimately the social cost of getting back to price stability, causing even greater harm to families and businesses. And we aim to avoid that by remaining steadfast in the pursuit of our goals. And Powell characterized current Fed policy as restrictive and said future decisions would be data dependent and as opposed to being a preset course. And the FOMC has obviously raised the rates to 5 to 5.25%. So overall, I would say a very balanced thinking and overview, kind of talking about how inflation is still too high. It's still too sticky. People and businesses are still experiencing high prices, but at the same time, we are restrictive and a pause is possible considering what's going on with the banking crisis and the tightening conditions that it's going to create or is already creating in the economy. So I would say, again, walking a very fine line here of not being overly optimistic or not being overly pessimistic either, and just kind of making sure that the market understands that and doesn't start expecting or predicting a lot of things. So we haven't made any decisions about the extent to which additional policy funding will be appropriate, but given how far we've come, as I noted, we can afford to look at the data and the evolving outlook. Monetary policy is large in part being geared towards cooling the hot labor market, which currently is 3.4% unemployment rate, is tied for the lowest since 1953. So again, we're looking at a 50-year low labor market here. On the day, pretty much in the US. So on the day here, Tesla here up over 1.8%, Amazon down 1%, Google, Meta were flat. We did have NVIDIA slightly down, AMD slightly down, Microsoft, Apple were flat. Energy started to rebound a little bit, healthcare pushing higher. We did have materials and even healthcare stocks push higher, but financials, software and a little bit of semis, with the exception of Broadcom, Fortinet, Adobe, Cisco, and Arista Networks, they were all pulling back or sideways on the day. So this right here is the entire market. So you can see that only two sectors pushing higher for the most part, healthcare and energy. Everything else was down. And in the last 1 week, we have seen this rally kind of broaden out a little bit to other sectors, other parts of the market, like financials and cyclicals and industrial and energy. But we do still have 4 out of the 12 sectors or 11 sectors in the S&P 500 that are down: healthcare, defensive staples, real estate, and utilities. And the last 1 month, it is still only 2 sectors leading the way: technology and, of course, comm services, along with cyclicals, which are pretty much your big tech, to put that in perspective. So palladium pushing higher, cocoa, orange juice for the win. Once again, coffee prices, silver, platinum, copper, gold, everything pushing higher, with soybeans, lean hogs, and oats pulling back. And Bitcoin here, a little bit under 27,000, and Ether also at over 1,800 at the moment. So when it comes to crude oil, we are once again just kind of stabilizing, going sideways and flat at that resistance. So that is something to pay attention to at $73 a barrel. So really just going sideways right now. And for crude oil, for Ether and Bitcoin, once again, just trading sideways here. Ethereum a little bit over 1,800, not really seeing a lot of momentum. And Bitcoin just back under 27,000. So this right here is going to be either a support or a resistance, depending on where we're trading. Right now we're trading below that level, so it's going to be a little bit under 27,000. Volatility, on the other hand, was up on the day, up over 4.8%. So a little bit of a push higher. So that's exactly what we're talking about, right? The VIX is really, really low. We're kind of subdued, and the market's here approaching some type of a resistance. Not to mention that we're starting to get a little bit more coiled in to those higher highs and, of course, that rising wedge. But hey, the momentum can keep on. I'm not saying the momentum is going to fade away, but we just got to be understanding of the fact that it's not going to be forever. It's not going to be indefinite, and it's not going to be sustainable. At some point in the future, we're going to see resistance levels get tagged and start to see a bit of a pullback, some profit taking, some reversals, some red days. That's just part of the market, right? You can't deny it, right? It's part of nature. Now going over to the markets, S&P 500 and the Dow, and the NASDAQ here. S&P 500 just a little bit under 4,200, so very, very critical area. In fact, we were trading past 4,200 on the day today. So S&P was past 4,200, but then the sellers stepped in, so we started to see some red candles, and red day, red candle, pulling right back down under 4,200. So we're starting to really see that break above that resistance, that bear camp that we've talked about, but we're not quite seeing that continuation. The NASDAQ's really offering that continuation. So you can see the NASDAQ, a very, very nice breakout this past week. In fact, it is up a little bit over 3%, which is a very, very prominent week for the NASDAQ, not to mention for the S&P, it's up over 1.6%. So regardless of what went on the day today, this week was very strong and very bullish, and we were just talking about it in our Discord, how much everybody's up on a year-to-date basis. It's just crazy to think about that. Just obviously, if you have been a little bit more focused on technology going into this year, you're up like anywhere between 25 to as much as 100%. But of course, if you've been a little bit more conservative, and there's nothing wrong with that, right? Just be more reasonable, then you have to be more rational. But if you've been more conservative, even then you're up like 14 to 20%, 25%. So markets have obviously done really well so far this year. Still doesn't mean that they can't keep going higher, because they absolutely can. This year can even be better for the remainder of the 6 months, 7 months that we have left. But we just got to be understanding of the risks that carry with that high rate of return that might eventually come out in the next 6 to 7 months. So very strong week. Resistance is going to be 43.30. This is going to be that next level to watch for the S&P 500. And of course, we got this as a potential support if we see that continuation for the S&P moving forward. And of course, for the NASDAQ, we already have that support here at 12,002. We're seeing a very nice move up over 370 points this week alone. And the next target and the resistance is going to be at 13,000 for the NASDAQ. So that's going to be that next level to watch. Very, very strong move for both the NASDAQ and the S&P this week. Talking about Apple here. And Apple on the day flat on the day, after hours, slightly down. And resistance is going to be a 177. So that right there is going to be the level to watch. Definitely RSI getting up to overbought levels. So is the MACD. So again, just being careful. And Apple has very nicely pushed up over 30-40% since its low from back in January. And for the year, it's up a whopping 34% and pulled in over $600 billion in market cap. So it definitely has seen a lot of momentum this year. So resistance is going to be a 177. That's the one to watch. Tesla here on the day was up a little bit over 1.8%. So very strong move. After hours is back under 180, but this week it's up over 7%. So very nice outperformance and a move from Tesla. And this right here is going to be that support. So we're watching as that green rectangle as an area of support for Tesla, and resistance obviously is going to stay all the way up to as much as $206 to as much as $220 per share for Tesla moving forward. So those right there are going to be some levels to watch as a resistance, and support level stays put inside this green rectangle at roughly around 170. Talking about Amazon very quickly here. Amazon also up over 5% this week, so very nice move to the upside. Started to see that continuation a little bit. However, was down on the day, down about 1.6%. So starting to see a bit of a pullback. Not a surprise, right? RSI MACD definitely a bit on the overbought side. So it's only normal for the price to pull back a little bit before it starts to make its next leg up and next move higher. So think about it taking a bit of a breather before making that next move higher. PayPal on the day was down another 0.5%. So really not able to find its footing yet, and back once again trading under $61. Support level is going to stay put at 57. So this right here is going to be that level to watch for PayPal that we need to pay attention to, of course. And $57 is, again, like I said, is going to be that next support, and resistance all the way up to $66 per share. A more intermediate support is going to be the one right here at around $60, and we'll see if that level holds up, because that's really where we've been trading over the last couple days. But if it breaks down below that level, $57 is going to be next. Talking about Square, and Square here on the day slightly down about 1.5%. Trading back above below $59, and this is going to be that resistance to watch right now, where we're getting rejected at $59, and support level is going to stay put somewhere around 55 to as low as $51 per share. So those right there are going to be some support levels to watch for Square. Talking a little bit about NVIDIA, and NVIDIA here pulling back slightly down about 1.3%, after hours slightly lower, 30 basis points, but very, very nice move. And I'm gonna obviously keep sounding like I'm beating a dead horse, but valuations too high. Technicals are obviously overbought, so Hey, what can we do? When momentum rules, everything else fails, right? So momentum is king. At least right now is what we've seen. So 347 is going to be that resistance. 291, $280 is going to be that support. But in my opinion, I think eventually the logic will overrule momentum, where the company value is going to matter more than the stock price. But yeah, support level is going to be 280, 291, and resistance all the way up to 347. Talking about advanced micro devices and AMD here, pulling back close to 2%, so slightly down, back under 106. And support level is going to stay put at close to about $100. So this right here is going to be that level to watch. Not to mention the RSI, of course, overbought. So is the MACD. So again, technicals are not very favorable on the long side for advanced micro devices. Talking about Meta platforms, and Meta here was actually hitting a new 52-week high at just over $248, but has seen a bit of a pullback on the day. Support level is going to stay put at 236. So this right here is going to be that level to watch as a support for Meta. And of course, we've got huge gaps to fill here for this company. Next up, we've got Netflix, and Netflix here starting to pull back. I did a video on Netflix earlier today, so make sure they do check that out if you haven't already. But resistance at 375, that right there is going to be that level. We're getting rejected at that resistance, and support level is going to stay put down to 349, $350 with the RSI and the MACD, potentially looking at overbought levels as well. Finally, we got Google and Microsoft. And Google here, oof, that's not the candle you want to see. That's a bit of an inverted hammer with a lot of sellers stepping in with a long wick on the upside. Usually happens towards the end of a trend. But yeah, we'll see. I mean, RSI is overbought, MACD is overbought, so I would not be surprised if Google ends up selling off in the weeks to come. And this might actually look like a nice short trade idea in the future. So I might share that with our members with some decent risk reward setup here for Google. So we'll talk about that in our Discord. Again, link's going to be down below if you're interested in joining us and getting that access to all the trade ideas and options alerts and all those things. But yeah, this is something that I might look at from a short perspective on Google, considering that candle and of course the overbought levels for the RSI and MACD. So Microsoft here, green candle, red day, very, very flat and continues to move up. Similar to NVIDIA, the momentum is very strong despite the valuation being really, really expensive. RSI, MACD overbought, so we got to be careful here. Support level is going to be at 312, resistance at 344. And finally, we got Shopify slowly and steadily kind of drifting lower. Support level is going to stay put at $54 with a resistance at 75 for this company. So overall, I hope you guys enjoyed this video, and if you can't tell, I am extremely exhausted. But that being said, markets very strong week, filled with lots of interesting macro data and earnings. And we'll be back at it on Monday morning. I'm going to be back in India next week, but I'm going to be in the US, of course, very soon. So hope you guys enjoy this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. 16% annual discount as always. Happy investing. I'll see you all in the next video and have a great weekend.